how do you foresee the integration of ESG consideration into wealth management practices, and what benefits does it bring to investors rather than just the hype? What actual benefits is it bringing? Is it the quality of management considerations when folks look to invest? What is it that is at play?
Yeah, I think it's a good one. See, you need to define ESG very well. Unfortunately, what has happened is we have just restricted it to the E part of ESG, which is the environment part of ESG, and not laid much emphasis on the social and the governance part of it, as you highlighted. There's been a fad of only looking at clean energy companies, only looking at non-renewable sources of energy, only looking at EV vehicles over. So I think people have wrongly classified it, white versus black, which I think is not the right thing to do. And I made that point earlier. Whenever anything becomes a fad and only becomes related to that fad, it's easy. So, for example, in India, the ESG funds corpus has grown from about 300 million to about 1.3 billion pre-COVID to now. But if you see last 1 year, that particular theme, the way it was implemented, underperformed the market. In US, for example, 8 out of 10 funds, ESG funds, have underperformed the S&P 500, which is a much broader index. Same is the case for India. So I think you need to define it well. So paint also, for example, uses 20 liters of water, right? So which to me is, other than being water polluting, it water is a very scarce resource. EV, for example, uses cobalt. Cobalt mining largely happens in Congo, where you have child labor issues, right? So you need to have a very balanced approach to it. Need the right marriage between traditional and newer sources. David Solomon made that point, just about a couple of months back, that it's also reliable and cheaper energy and not just clean energy, right? If I'm not able to supply energy at reasonable price, what is the point? And I think West has maintained some double standards on this, which you need to probably dissect. So I think it's important from a risk management point of view, because it entails governance and social responsibility. It's important from long-term delivery for all stakeholders, because if you're really compliant on governance and overall proposition, it benefits every stakeholders and not just confined to it. So we believe in marrying the two well, rather than just being, as I said, very very focused about just the E side of it, which is just plain definition of this is good and this is bad. Look at, for example, last year. Look at UK. UK was the largest producer of steel for 100 years. Today, it hardly produces any steel. With Tata Steel about to shut down, it probably so. And you can't do away with steel, right? So you can decide how to reduce the emissions, how to make it bring more value proposition there. So have a balance between the two, and that is how we lay more importance on the governance part of it.
All right, we have about 5 more minutes left in this conversation. So let's have a round of rapid fire answers. Dr. Gupta, your sustainable finance dominance. So how can individuals their investment choices with ESG principles, and what education initiatives can contribute to this alignment?
Yes, I think educational initiatives are very, very important, because when we are talking of a country where the financial literacy is as low as 24%, obviously the ESG literacy is going to be definitely low. And hence, I think a large population does not know the difference between a net zero and carbon neutral, for example, right? And hence, I think the first step has to be literacy, because only then we can expect the individuals to participate and make informed decisions based on ESG, or selecting companies based on who is driving what. So I think research and literacy is going to be the first step for getting individuals to understand what it is all about. I think companies have largely understood to some extent and mostly have adopted, but for individuals, I think it's a long journey for us to take them there.
Miles to go before we sleep, as they say. From demand side, let me look at supply side. Meghna, coming to you, in the era of ESG considerations, how can businesses align their financial strategies with sustainable practices, and what role do you see technology playing in ensuring transparency in these endeavors? Your quick view on this.
Right. So I think technology plays a huge role in ensuring that businesses are getting to be more and more ESG, compliant and moving towards, zero carbon kind of a footprint, maybe in the next 20-25 years, right? India has a goal in 2035. So, the only way you can be compliant in reducing your carbon footprint is to be able to track with data in terms of every business activity, right? And the kind of impact it has on environment, or socially or with governance. So I think a lot of regulations that would comply businesses to report, specific ESG related data, very light kind of reporting for smaller businesses, because I think it's important, for every business to kind of be very consciously aware, because everybody is creating individually or as a business a carbon footprint, right? We're all participating in all the consequences that are happening with in terms of climate change and the environment. So all of us, I think, from a governance perspective, if the government and regulators make some sort of a very light disclosure requirement of data, right, which we businesses disclose minimum amount of financial and compliance data, small businesses, I think the certain kind of other kinds of data on relating to ESG should be made mandatory to disclose it. For larger companies, I think right now in terms of credit rating and all of that, when you look at larger companies, I don't think that ESG is still formally a part of their overall evaluation. I think that's happening more in the West, where a lot of your funding from certain groups or institutions also directly correlates on your ESG compliance and also your public sentiments. But I think that kind of mainstream reporting of data and using that to kind of, again, govern your behavior and correct your behavior and guide you towards a path of getting to be more carbon efficient, I think is the way to go. And that's kind of what we could do with some amount of light regulation for everyone to be more transparent and aware in terms of what kind of carbon footprints their businesses are creating. That's super important.
Absolutely. I hope multinationals could drive that change forward, and it's not fragmented, hopefully, and more an ecosystem approach that takes place where everybody wins. All right, as we are in the last leg of this conversation, Dhirendra, to dial back the conversation towards the investment side, as we navigate uncertainties in the financial realm, how crucial is investor resilience, and what strategies would you recommend for investors to build and maintain resilience in the face of market fluctuations? You have about 20 seconds for your answer.
Markets will always be fluctuating every day, and resilience has to come from your habit. First save, then invest, then set your principles and decide what you will never do, and make sure that you are, allocating well, you are diversified, you are rebalancing, and you are not falling for any nonsense.
All right. Always make sense of your investments and don't follow the herd, especially when it comes to something which appears shiny and attractive, but could affect your investments in the negative in the long run. Wise words there. Gurmeet, coming to you for the last word. As an investment professionals, how can one stay informed and adaptive, according to you, to the evolving trends in global finance? And what role does continuous learning play in successful wealth management? Your words to our investors, to our viewers rather.
Understand what you do. You don't have to buy everything, every passing thing in the market, right? And you just need few ideas to get rich. Second, consistency over timing. As Dhirendra made, but I think if you see Virat Kohli because he faces about 1,000 balls every day. You can't just get up in the morning and sprint your way up. Thirdly, look forward to corrections. They say in Hindi, dhoop and chhav, ups and downs. Straight line is when you are dead. Volatility is integral to investing. Look forward to volatility. It's always your friend. Most importantly, in India, for example, we are in a very, very sweet spot as an economy. Have the patience and stomach for any things will go wrong. Every 10% once a year, 20% once in 2 years, large once in 5 years. The name changes, right? But be an optimist. To make money, see, pessimism will make you sound intelligent. Optimism will make you money.
An investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.